Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. This is week 4 of the Forex market review. Please pause this video and review the following disclaimer. Thank you for that. Today we're going to take a look at the daily FX news, and then we're going to have a look at two shares, and both currency pairs will be the Euro Pound and the Pound Yen. Let's go ahead and have a look at the news. So here we have is the daily FX calendar. You can go ahead and just go to the dailyfx.com website, click on the calendar, and you can see what the news is coming up. What I've done is I've already changed the GMT time to our local GMT time here in the eastern states of Australia, and I've put it on the filter for only the high importance news. And what I've done is I've clicked on the weekly view, and we're just going to scroll through and have a look at what's occurred and what news is coming up. Now, beginning of the week, we had 2 days. On the Monday, we had the New Zealand holiday, and on Tuesday, we had an Australian holiday. So here in Australia, we all celebrated Australia Day. And that's just where everyone gets together and just celebrates being Australia. And that's what it's all about, recognising who we are and where we come from and just having a good old time. And it's always great to have a day off, so why wouldn't you want to enjoy it with your friends and family? And here in Australia, it's very nice, warm weather. So most people go to the beach or the river, and then they watch the sky show at night time. If you're in the western states, or if you're eastern states, they do a lot of other things, crab racing and toad racing, and you name it. It's weird and wacky sports here in Australia, but that's what we do, and that's what we love being Australian. And for everybody else, you should definitely come and visit Australia. It's a wonderful, wonderful place. So what we have on Wednesday, we had the USD consumer confidence numbers come out. They came out slightly better than expected at 98.1 versus the forecast of 96.5. We've also got the Australia CPI numbers coming out, and that's coming out very soon. So hopefully these numbers will be in line with expectation. And if they're not, then the Aussie dollar should weaken in value. And moving along, we've got a couple of important news tomorrow, Thursday, January the 28th. We've got Australian Eastern States time, and early in the morning for us, we have the US Fed rate decision. It's likely they'll keep the rate unchanged at 0.5%, so it'd be a surprise to the market if they do decide to increase that rate, as well as the New Zealand interest rate decision is also going to be following 1 hour later, and again that's forecast to be left on hold at 2.5%. So depending if there's any changes to that number, likely to come down, then we're going to see some weakness in the New Zealand. So if you're trading the New Zealand USD short, you're going to have a lot of movement lower if one goes up and the other one comes down. But at this stage, they're likely both to remain unchanged. We'll also have the GDP numbers coming out for the pound. And then following on Friday, we've got some Euro CPI numbers, some Yen CPI numbers coming out as well. And on early Saturday morning for Australian Eastern States time, we have the GDP numbers coming out for the USD and the Canadian. So all of these numbers we like to look at, and that gives us a decision on which way we think the market will go, and then we can preempt it before the announcement comes out. Because once the announcement comes out, it's going to run really fast if the numbers are out of whack to what they're forecasting. So that's why it's always good to have a look at the weekly view, see what's coming up, and then make a trade decision based on what you believe the numbers might be. So this week, being week 4 of the Forex market review, we're going to have a look at two currency pairs. And the first one, as indicated, was the Euro Pound. And so what we're going to do is start on the daily chart. And what we can see is what looks like this big move up here, looks like to be a move for possibly a wave 3. So if we're going to throw some indicators in, we're probably looking down here to be about a wave 1 for a move back higher, and then for the end of wave 1 and for the start of wave 2, pull back lower. And then we're going to have a move back higher again for the start of wave 3, and then likely a pullback lower for the start of wave 4. Now, we're unsure exactly where this market will go. So what we want to do is, if we believe this is wave 3, what you want to do is just drop a bit of indicator so you know roughly where wave 3 started. And then you just drop down to a lower time frame and look for some divergence. So if we drop down to the 1 hour chart, what we can see is a higher high in price with a lower AO. And some people like to use the MACD. So because the price has gone higher and the AO in this case on my chart has gone lower, that is indicating divergence, which means it's likely that the market will change direction. And as you can see on a shorter time frame, it has. If we drop down to the 15-minute chart and we just scroll back a little bit, again, we can still see divergence even on that low time frame with another higher high in price, but then the reverse happening where we have a lower low. So that is indicating divergence on the 1 hour and also the 15-minute chart. So if we go back to the 1 hour chart, what we can see is what looks like also another wave 5 lower. So if we're going to take this trade, you might be looking at on the daily chart saying to yourself, I'm going to wait for a pullback before taking wave 5 higher. And in that case, you would be looking for a pullback, and hopefully you might see some 5 waves move lower. And what you're seeing here, we can see a 5 waves move lower, and that's why we sometimes like to look at the lower time frames, and we can maybe even make a trade decision in the opposite direction. So while we're waiting for this wave 3 to pull back for wave 4 to give us an entry confirmation to go higher, we can look at the lower time frame and say, well, we can see divergence occurring. So let me see if I can take a trade lower. And if this is wave 1, up for wave 2, back for wave 3, just like any other trade, we'll use our fib retracement tool. We put it from the recent highs to the recent lows, and we're looking for a pullback of about 50%. So if we were to take the trade around the 50% level, we'd want to be looking at getting out or taking some of our profits down around here, which is about 100 pips, and the stop loss up here of about 100 pips. So that would have given us a 1-to-1 risk to reward, and in this case would still be in the trade. Now, if we want to see how low we can go, what we need to do is obviously take a look at the fib expansion tool. And by using the fib expansion tool, that gives us a prediction of roughly where we think the market may go. And again, same as the fib retracement, from the recent highs to the recent lows, and then in this case you've got a third pointer, so you go back to the recent highs again, and what we're looking at is getting out at the first one, the 61.8, and that's where we said we would make 1-to-1 risk to reward. And if we took the entry, which is somewhere around these levels here, and we're looking to make 100 pips 1-to-1, our next exit is down here about 180 pips, so that's almost 1 for 2. So we're going to risk about $100 to make about $180, and that would be a very, very good trade. And what that would also do back on the daily time frame is that will be the pullback for wave 4. So as we just shown on the 1 hour chart, if we have a look on the daily chart, we're looking for a pullback. Again, we're looking for around the 50% fib area. We're looking possibly taking a trade, and looking left, we can see using this new DSR indicator from one of the our suppliers, you can see that there's a lot of support around and resistance around these areas. So that 50% pullback is likely to be a strong holding point when the pullback comes for wave 4, and then the final move higher on the euro pound. So that's just an example of how we're using divergence, fib retracement and fib expansion plus wave analysis to determine which way we think the market could go and how to profit in that market direction. So now we'll look at a similar chart on the pound yen on a daily chart. And again, we're just looking for those indicators on the wave cycles. So here it looks like we're having a wave 3. And we like to identify wave 3 by being the largest AO, or the first largest AO. So in this example, if we believe that is wave 3, we just drop our indicator text tool on the top, and we'll just label that wave 3, and pullback for wave 4 is about to occur. And how far do we think wave 4 is going to go? Well, that way we just use our fib retracement tool. So from the highs to the lows, and we can expect it to come back around the 50% level. So if we were to drop our tool line, horizontal line around the 50% area, we can see it's meeting up with these DSR horizontal support levels. And we find that just by looking left to see where it's bounced a few times. And as you can see, this indicator automatically predicts those for you without looking yourself. Now, when we want to take this trade, we probably might want to get preempted a little bit, maybe get in a little bit earlier. You might want to choose to get in around this level here. You just got to remember that if you're trying to make about 1,000 pips down to the lows here, then you want to make sure you have a reasonable stop loss a bit higher. But while we're looking for that pullback on the wave 4, and just to see if wave 3 is ended, we can drop down to a couple of time frames, and as we can see on the 1 hour chart, we have divergence with a lower low-end price and a higher AO, or people would use the MACD. So now that we have divergence on the 1 hour chart, and very likely we probably have divergence on the 15-minute chart, which we do, a lower low with a higher AO, and that's just showing prices are going lower with less strength is pretty much how we like to look at that. We can say that it's pretty likely that this daily wave 3 has ended and we are pulling back for wave 4. So why not take advantage of that wave higher, and we can look at another scenario where we think this is wave 1, pull back for wave 2, pull back for wave 3, and just remember we are now on the 1 hour chart, so we're looking for a wave 4 on a daily chart pullback higher, and that wave 4 pullback is likely to have 5 waves. So on the 1 hour chart we can see 1, 2, 3 pullback for wave 4 and the wave 5 move higher. Now, if we're going to enter the trade, obviously we can't see what's occurring over here, so we just pull the market back, and what we're looking for is the fib retracement to say to ourselves, how far do we think wave 3 is going to pull back? And we just go recent highs to recent lows, or in this case it's the reverse direction, so it goes recent lows to recent highs, and we expect it to pull back around the 50% area. And as you can see, if you're looking left, there's some support area around here, maybe a bit lower, probably could have come back to about the 61.8 would be my assumption, but we don't know, so we might have put an entry there. We want to had about a 300 pip stop loss, about 300 pip stop loss, and then we just see which way the market's come along and bounce, 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 bang, there you go, look, right on the 50%, almost got to the 61.8, but it found that support area and then bounced back higher. So obviously I'm just showing you this because that's just obviously we can see what's happening here, but we want to know what would have happened before the market occurred, and that's why we just take an entry roughly around the 50% level, and then we'd be in the market. And now, because it's reached its highs again, we would have likely moved our stop loss from here down here to break even. So now we're not losing any money. And what we want to do is predict how high it could go. So this time we use the fib expansion tool, and you use the fib expansion tool to go from the recent lows to recent highs and then back again to the recent lows. And as you can see, the fib expansion tool is predicting the first area to get out is that double top, with the next area up at these highs at the 100% level. And that would have made you risk to reward. You would have made about 400, 500 pips. So if you're risking about, say $100, you would have made at least $150 there. And that would have been another good trade while you're waiting for the pullback on the daily chart higher. So I hope you enjoyed this week's video, week 4 of the Forex market review, and I wish you all the best in your success. Take care, and if you're looking for this tool that we use, the DSR, you can find that on our website at the training courses section. Thank you. Take care.